Inflation tends to be really good for commodities such as gold and silver. So in this video, we will talk about gold and silver, and we will jump into some technical analysis on the gold and the silver chart. And at the same time, I will also provide you guys with a few stocks that are related to gold and silver that I am personally invested in and that I personally think that are standing at some pretty good levels right now that are considered to be great deals, and that I am myself looking to add more to those positions. So welcome to Chibind Brothers. My name is Joel. If in this video at some point I provide you with any value whatsoever, please allow me to ask you to hit that like button and also subscribe as well. So let's jump into the chart of gold. And so guys, as you can see, I have the chart of gold right here. And just a quick reminder, I did a few weeks ago, I did a video on gold and silver where I basically went into the nitty gritty of exactly how gold is made and silver, and where gold and silver are typically used in the economy and why they have value. And so if you would like to learn more about that, you can check the video. I will link it in the cards above and also in the description, so you can go check that out. So if you want to learn more in that aspect, but in this video right here, we're just going to do some technical analysis, guys. And guys, as you can see here, what's really interesting here, you can see that gold reached a high back in August of 2020. This was on August 6th, and it reached a high of about $2,071. And then ever since then, we basically went into this correction stage onto reaching a low around $1,677. And that was 3 times. So this was in March of 2021, and then twice in March of 2021. And then we also experienced that in August of 2021 as well. And then ever since then, we can kind of see that we've kind of been recovering here. And what is really interesting here, you guys, is, you know, I use 2 moving averages. I use the 200-day moving average in white and the 50-day moving average in blue. And as you can see right here, this was in February of 2022. We can see that the 15-day moving average finally crossed above the 200-day moving average, which is really bullish right here, because this is a golden cross, basically insinuating that, or showing us that, hey, we might be going into a bullish recovery, right? And that's what we've seen with the price ever since here. We've basically went from $1,800 all the way to reach the all-time high at about $2,070 before correcting back down again. And so guys, what we're seeing right now in the market, as I'm picking up this brush, is you can see here that we basically shot all the way up. And this is something that usually happens when you have a golden cross like this. It shot up and then it came back down. We can see that we've been through some consolidation pattern for a while, and then in April we started going back up again, and then looks like there are some resistance right here, and then we're basically, and I believe these resistance right here kind of relates to the previous resistance back in 2020 here. And so we're experiencing these resistance here, and then we're seeing the price going down to correct itself again. And so, you know, because of what we're seeing right here, it's because of what we're seeing right there. Now, the question is, we're seeing the price going below the 50-day moving average. And, you know, what we've seen, especially in the gold market, when we're looking at a bunch of stocks where, you know, with this small correction that we saw here, I saw my portfolio over the week just plummeting, right? People were just selling. And this is something that is very common, especially in the commodities market, is, you know, a small percent or a small change in the price of the commodity that result in massive losses in the actual stocks that produce stocks of companies that produce that commodity, right? So if gold goes down by 5%, stocks are going down by 10-15%, right? It's just a matter of it's just a matter of facts, right? That's just how this market works. And so this is something that I would like to also put out there for people who are interested to invest in these kind of assets, is if you're going to invest in gold related stocks or silver related stocks, you have got to be ready for the volatility, because the volatility in this market is crazy. Today you're up 20%, tomorrow you're down 25%. That's just how the market works. So you have to be prepared for that, and you have to be ready for that kind of volatility in these types of a market. And so guys, one thing that I would like to do here is I would like to kind of go back in retrospective and kind of look at a bigger picture as far as where we're coming as far as the gold market is concerned. And when we look at this, guys, when we look at this, see guys, gold reached an all-time high almost about $1,920 back in August of 2011, and then ever since then, that was when we basically went into a big correction. Which, as I'm taking this brush, we can basically kind of be able to see the correction that happened all the way to reaching a low almost $1,060 back in in 2016, 2015. And then ever since then, we kind of started recovering back up again until we reached the high in 2020, and then we just reached the high in 2022 again. So guys, this is the picture of where gold is coming from. So you can see that this is a very cyclical market, a very cyclical market that it basically experiences up, experiences down, and then it goes back up again, right? But when you look at it over a longer period of time, the price is still going high, right? So if you actually own gold, let's say you own, gold coins or gold bars, right? Over a longer period of time, 20, 10 years, yeah, you're actually making money, right? But if you just want to make a quick buck in the short term, this is probably not the place for you to be. But guys, what is really interesting here is when we go here, because we are on the weekly chart right now, is guys, look at RSI. RSI is, I think it's sitting good right now. It's, it's not overbought, it's more than, above the, under oversold, I would say. Just above the mean between overbought and oversold, right? Just right above there. And what is really interesting here, guys, is we're seeing that we're failing this resistance right here, right? We're failing that resistance and we're going down. Now the question is, are we going to go down all the way to hitting this 50-day moving average? Because if we go down to hit the 50-day moving average on the weekly chart, that means we're going down to about $1,830 something. That would be $100 drop from where the price is right now. And I'm not saying that's what's going to happen, but it's a big possibility that we may actually go down to hit this resistance before we start going back up again, right? So this is gold, guys. So now what I would do is I will go on the silver chart. And as you can see, guys, actually, personally, I am mostly more invested in silver and silver stocks than gold. And the reason is because I believe that silver actually provide us a better return, because silver is actually cheaper compared to gold. And one of the reasons why I would show I believe that is, first of all, let me just go back on the weekly chart and show you where we are. See, in 2011, silver reached $50. Back in the 1980s, silver was worth $50. So over a longer period of time, we see that where the price of silver is sitting right now, it is undervalued compared to where it had previously been. And so as you can see here, the chart of silver, kind of similar to that of gold. But what is really interesting here is, guys, we also saw this golden cross, right around, March. It's lagging a little bit compared to gold, right around March of 2022, which was last month, and we see this right here. But silver hasn't actually been able to go back and test its previous high that it reached back in 2020. But here's how I assess the price of gold, the price of silver versus gold. So guys, this is the gold to silver ratio. Basically, this is the ratio that means for every 1 ounce of gold, how many ounces of silver can you buy? And right now we're sitting at about 80. That means for every 1 ounce of gold that you have, you can buy about 80 ounces of silver. And so now if we look at this gold to silver ratio in perspective, in retrospective, I wanted to say, is when we look at it in retrospective, during times in 2011, for example, where they both reached their high, that ratio was right around 31. Right? That means for every 1 ounce of gold, you can buy 31 ounces of silver back here. But right now it's 80, right? It's more than double. And this right here shows me that actually gold is a little bit more expensive compared to silver, which is why I am mostly more heavily invested in silver than gold, because I believe that silver will outperform gold. Because usually when there is a bull market, and especially with what is going on in the market right now, especially that we are living in a high inflation market, and with the Federal Reserve tapering and saying that they're going to be increasing the interest rates. And I believe it was last week the Fed chair Jerome Powell who said that they were even going to try to be aggressive as far as going up 50 basis points or 0.5% in rate hike in May of this year, right? And so I believe high interest rates, high inflation. And the reason why they're trying to increase the interest rate, interest rates, is because they are trying to combat inflation, which is right around 7% right now, I believe, if I'm not getting the number wrong, right? And this type of environment is really good for commodities, right? But one of the reasons why you may be asking yourself is like, well, but we've kind of seen this environment for a while. Why isn't these commodities going up by so fast? One of the reasons is because of the US dollar. So this right here is the US dollar index, right? Basically kind of shows the strength of the US dollar. And when you look at the US dollar index right now, you can see that the US dollar index has been kind of gaining some strength, right? And the reason why it's gaining some strength is because the US dollar right now is a little bit resilient as far as people are hoarding money. They're trying to keep it. They're not really out in the market, no, people are not like hoarding the money, right? People are actually in the market trying to spend. People are buying goods. And of course, because of the fact that we also have a lot of shortages because of the supply chain issues, people are trying to get their hands on a lot of stuff just in case, they things run out or whatever. And that right there makes it so that people are spending money into the economy. And that right there is what it's actually still keeping the US dollar to be a little stronger. But once we start seeing the economy to get a little bit more weaker, which I believe would happen, especially with the Fed increases the interest rate, and especially as aggressive as they are now thinking they're going to be with increasing the rates by 50 basis points, I believe we might see some more weakness in the market, even stock markets and the cryptocurrency market, and also corporations not being able to pay their debt because they have really high debts and low margins, and high interest rates may actually be an issue for them. So guys, so far we just kind of talked about silver, we talked about gold, we talked about silver being undervalued versus gold. Now, companies that I am invested in, guys, the first thing is Sandstorm Gold. Let me go back on the daily chart. Sandstorm Gold is a gold royalty company. What is a gold royalty company? A gold royalty company is basically a company that has a contract with a producer company, a mining company that produce the gold, and then they sell them the gold at a certain fixed price. Let's say they sell them the gold at about $900 or $1,000, then but the gold in the market is about $1,900, right? So they make the difference in profit. So that's how gold royalties company work. They're not actually producers. They just have royalty streaming contracts with the actual producers. And what you can see here is, guys, we see that the price of Sandstorm Gold went above these long-term resistance, and then now we're coming back to test the resistance again. I believe this right here at about $8, and $8 is a really good buying point for the future. The next one is B2 Gold. B2 Gold is an actual gold producer, senior gold producer that has operating mines over, in many continents. And one of the mines that they actually have, which is their biggest, actually in terms of revenue, also in terms of ounces of gold produced, is their mine, I think Fekola mine, I can't remember exactly what it's called, in Mali. And I believe at the price where it is standing right now, and with all the cash flow that the company has, it's pretty undervalued. And I think this is a really good price. Guys, this is not financial advice, by the way. If you get in, you lose money, it's on you. You should have done your own due diligence, because I did mine. Just my opinion. Anyway, and the last one is SILJ. SILJ is a junior silver miner ETF. What is junior silver miners? Junior silver miners is basically the smaller companies, the smaller miners that are either in exploration or in feasibility study, or even if they are producers, they're not that big yet. They don't produce that many ounces compared to the senior producers that produce much more ounces. And so this is an ETF, basically means that it is a package by a bunch of junior silver companies, and basically you're a little bit more protected here because you're not buying just one company, but you're actually buying a basket of silver junior miners. Anyway, guys, so that's really all I had for you guys today. I hope that I provided you with enough value, and if that was the case, please allow me to ask you to hit the like button, subscribe to the notification bell, and I will see y'all in my next video on Sunday. Bye bye.